Hey traders, and welcome to the Forex Focus, the show where we look at some of the themes that are dominating the FX markets and then look at some opportunities that could be setting up for the week ahead. But before we get into it, it's important to remember that everything I talk about here is my own analysis, it's my own thoughts on the markets. I'm not telling you to go and take any of these trades. Indeed, I'm not actually authorized or regulated to give investment advice. So all I can do is tell you what I'm looking to do with some of my portfolio, and then you can take some of that away and look to see how it may sort of play itself out in your portfolio, and also look at the way that I analyze the markets and maybe incorporate that into the way that you go about trading the markets. Okay, so sort of like it's a way of giving you a view on what is going to, or what potentially could take place for the week ahead. But then more importantly, it's a bit of an educational piece, so you learn how to go about, analyzing the markets, picking your trades, and managing your portfolio. All right. So with that being said, let's now get into the main part of the program, which is to look at what is actually dominating the FX markets at the moment and what could be setting up for the week ahead. Now, last week, I think the big one was the Bank of Canada. So the Bank of Canada came out and they provided a very, very hawkish stance. So essentially they were saying, they were killing their quantitative easing program, and they were also sort of spicing things up a little bit by indicating that they may be hiking rates a little bit sooner than anticipated. And actually, Nikki wrote a piece of this in our Market Scoop newsletter, which if you don't have access to it, I'll post a link beneath the video here on how you can join the newsletter, and that's where you get all of his analysis on the fundamentals and things like that. But essentially, just talking about what we're referring to here in the Bank of Canada, what we're talking about is the fact that they're looking at hiking rates earlier than expected, and indeed next year, whereas we were looking at maybe 2 rate hikes in 2022, we perhaps, thinking that might be a little bit conservative, and we could be looking at 3 or even 4 rate hikes in 2022. Now, what does that mean, and how does that sort of play out from a FX portfolio perspective? Well, what essentially that means, and assuming that they maintain this stance, and obviously we know that the Canadian dollar is a commodity currency, so we look at oil and things like that to make sure that there isn't anything, different on the horizon from that perspective. But essentially what it means is that from a portfolio perspective, we want to start to look to maintain a bit of a bullish bias when it comes to the Canadian dollar. It doesn't mean that every single move is going to be in the direction of the Canadian dollar, so we're not going to get strength all the way through 2022, but certainly as you get the ebbs and the flows in the markets, we would expect that to sort of move towards the upside. So if you're looking at things like the dollar Cad, you'd expect to move down. Obviously, the Canadian dollar there is the quote currency, it's not the base currency. But if you look at other things like the Cad Yen, for example, then you would look for that to rise. So the Canadian dollar is the base currency there. And for those of you that don't really know what I'm referring to here, I'll do another video on that at another point, or perhaps again, sort of join our masterclass or our newsletter, and that's where we teach things like that. But again, I'll post a link beneath the video here so that you can get involved in that if you like to. All right, now let's go and take a look at some of the charts. So the charts that I've got in front of me here, in fact, let's start by looking at the Canadian dollar, which I haven't got highlighted as a trade that I want to take immediately next week, but we'll look at it from a positioning perspective, and that's the dollar franc, sorry. So let's go into the Canadian dollar. We'll go to the daily chart because we want to be a little bit more longer term looking in nature. Now, what we can see here from the dollar Cad is that it has been moving down over the past, it's been moving down since last year. So the COVID rally in the dollar Cad, then after that it's sort of sold off, and it's been maintaining that position to the downside. Then recently, from the middle of this year, we did have a little bit of a rally over here. So we saw the Canadian dollar lose some ground against the US dollar. It rallied up to, let's put that here so we can see how the technicals play a role. It rallied up to the 6th of Jan support level, which is 1.2944. We can see that then acted as resistance. The market played with that level a little bit and then has since sold off. Now what we're looking at from a market perspective is we can see that this is weighted to the downside. I think from a short-term trade perspective, we'd be looking at perhaps a break beneath this support level here. But as I said, the news that came out last week from the Bank of Canada really is longer term in nature. So it's not just this immediate move here. It's really about positioning your FX portfolio going into obviously the latter part of this year and then in 2022 to benefit off of sell-offs in the dollar CAD and obviously rallies in the pairs where the Canadian dollar is the base currency. Now, if we look at some of the other positions that could be setting up, we'll first of all take a look at the dollar index. We can see the dollar index here is rallying, so it is rallying. It is a little bit bullish. We are being capped somewhat by the 94.74 level. So if we can go in and get above that level there, then obviously that's going to spell a little bit more of some dollar strength. Obviously, if we can't get above that level and the market sells off from here, then we can expect some dollar weakness across the board. But at the moment, it does look buoyant. It does look like we are going to get some dollar strength, particularly if we look at Friday's close here. So we've got this big candle here, this big bullish candle, which closed above a previous support and then becomes resistance point. It's closed above that level there. I think that if we maintain that level, okay, and we can kind of, hold above this level, break towards the upside, then we certainly will get a little bit more dollar strength going into next week. But that's something you can keep an eye on, just to give you a bit of a pulse on what the US dollar is doing across the board. Although this is heavily weighted with the euro, but it still will give you a little bit of an idea. Now, if we look at the other opportunities for next week. So the first one that I've got my eye on here is this one in the Aussie Cad. So if we zoom out here again, we can see that the Aussie Cad from both the range charts and also the 4-hour chart has been giving some nice trades to the upside. Okay, so let me zoom in here a little bit. You can see that the market has been maintaining a bit of a bullish bias. It has been trading to the upside. However, as much as I expect a little bit of this to continue going into next week, the one thing that I am going to be looking at is, if we go back into the daily chart, is that we are coming up to this previous level. Oops, what did I do there? Let's go back in. So we are coming up to this previous level of resistance, which then could act as resistance again. And what we would expect when the market comes up to this level is we'd expect an opportunity for a bit of a sell-off there. And particularly, this is the Australian dollar against the Canadian dollar. So bearing in mind what I just spoke about to do with the Bank of Canada, that might be an opportune moment there to start looking for a bit of a positioning to the downside, to start to look to sell when the market gets up towards those highs. If we then hop across to the Aussie Yen, so the Aussie Yen here is also playing with a high. Although looking at the momentum here, I think that essentially if we can get a bullish close, all right, that takes us above this previous level of resistance at 85.78, then I think that the market will continue to give us a little bit more of a move to the upside. So what we could look to do, is take a bit of a tactical long up towards the highs at around the 89.02, at which point you can then start to look at it and then reassess to see, do you still want to be long at that level? Or perhaps do you think that this is a sort of resistance level where maybe you might see a little bit of a pullback in the markets, a little bit of a sell-off? So that's something that you want to pay attention to. But certainly, I think that this one here really does lend itself to a little bit of as long as we can get a bullish close above here, all right? So it's not just buy because we're at this level, but if the market shows us that it wants to, that there are enough bulls in the market above this level by giving us a bullish close, then that would be a good high probability opportunity to look at in terms of, obviously buying the Aussie Yen. Now, if we look at the Aussie New Zealand, so this one here, if we look at, let me pull out a little bit. So the Aussie New Zealand, zoom out and zoom in. There we go. That's about right. What we can see here is that the market is playing with a pretty well-defined range. All right. So what we have is we've got a resistance level at 1.0600. And then we've got a support level at 1.0414. So in and around that region there, we've got a pretty nicely defined range at the market. It's playing with a little bit. It got up to that level on the 14th of October. It then sold down to the level on the 22nd of October. Now, I wouldn't look to do anything in this sort of a region here. However, I do think that this is slightly weighted to the downside. So in terms of an opportunity, what I'd be looking for, and I've got this, you can see this on the 4-hour chart here, if I zoom in. So what I'm looking for is I'd be looking for the market to crack this level here and then give me a technical setup, whether that be a little bit of a pullback. All right. So the market, let me speak English. The type of thing I'm talking about is the market breaks down through that level. It pulls back a little bit. And then after that pullback, when it starts to sell off again, we either look to take a sell through support. Okay. So through support, 1.0348, or if we can get an entry, so some sort of a bearish engulfing candle or something like that in and around this area here, so we can get closer to the entry point, then what that allows us to do is maintain quite a tight stop if you're trading purely technically. Okay, if you're trading according to the active currency trader framework, then that's not something that will concern you. But if you're just purely trading technically, you have a tight stop in there just above this level, and you look to play a bit of a sell-off there, so you get a nice reward to risk ratio. If we then look at the Cad Yen, so this is one that lends itself quite well to the directional bias that we maintain in terms of the Canadian dollar. The market is holding above this previous level of resistance, and we had resistance in here in and around the 2nd of June of this year. The market rallied all the way up there, gave a nice resistance level, sold off from that level, then came back to it, paid attention to it again, which is important, right? When you're looking at the technicals, you want to see that the market pays attention to the level. You don't want them just to absolutely smash through it, because then that tells you that the level isn't in the market's eye, so they aren't paying attention to it, in which case you don't want to be doing it, because you know that the stops and the orders won't be around that level. But we can see here that the market is indeed, it did come up to this level, and it spent a few days at the level before breaking through it. It's then come back to this level again, and what I'm looking for is I'm looking for either a break above the highs like that, or if you're feeling a little bit more aggressive, then you potentially could look at taking a break through this high over here. If I zoom in there for you, on the 4-hour chart, you have a bit of a 1, 2, 3 reversal going on there. You can take your break, or you can take your entry through the highs there with your stop beneath the low. So something like that would be a great trade to look at. And then finally, if we take a look at the Euro New Zealand, so if we come in here, and let me go back to the daily chart and just tell you, excuse me, why this is so interesting. So we can see here that we've got a big support level printed on the 24th of February of this year. If we then go in there, we put in a horizontal line of support. Remember, one of my favorite setups is previous support becomes resistance, or previous resistance becomes support. From a technical perspective, they're fantastic patterns that seem to play out over and over again, and they yield very high probability trades. And that's exactly what we've got here. So the market is beneath that level there. If we hold beneath this level, then I think that essentially we want to be looking for a sell. Now, the one problem that we have here is the market on Friday already broke beneath the previous candle's low there. So we don't necessarily want to be selling into this. It could be a case of sort of selling a little bit too late. I'd want a little bit more of confirmation when the markets open up. So what I will be looking for is for the market perhaps just to consolidate a little bit more like this. And then this becomes a new support level. And once that becomes a new support level and the market breaks through that level, then I'll be looking to get in there on the short side. Okay? So that wraps up this week's Forex Focus. I hope you all enjoyed it. As I said before, please remember that this isn't investment advice. Okay, I'm not authorized or regulated to do that. The best that I can do is let you look over my shoulder whilst I analyze the markets. I show you the types of things that I'm looking at, and then you can go and see if you can incorporate, the trades or the pairs that I'm looking at into your own trading, or indeed the way that I go about analyzing the markets and identifying the trades. Okay. Now, if you like this video, please make sure that you subscribe to the channel, because I do have a plan here to start releasing, significantly more videos on the channel to do with obviously trading in general. More specifically, there's going to be a lot of FX related trading videos here. We're going to look to do a bit of a midweek recap as well, a midweek review where we look at where the markets have gone so far in the week and then look to see where they're going for the rest of the week, so that you guys don't just get the one video on the Sunday and that's it, but hopefully we can come back on Tuesday or Wednesday and look at what's happened there and look to see how if I get my voice back, how you you can play out the rest of the week. And there also will be some trading lessons in there as well. So like I said, make sure that you subscribe to the channel, hit the bell so that you get a notification as and when I release a new video, because I won't be sending emails out every time I release a new video here. I don't want to spam you guys. So hit the bell so that you get a notification. And also give the video a thumbs up. It helps with the YouTube algorithm. It helps the video gets out to more people, and I would just really, really appreciate it. Okay, so thank you so much for watching. If you have any questions, please post it in the comments beneath the video. Otherwise, I will look forward to speaking to you on the very next video. Take care now and happy trading.